Hello, my name is Lindsay Shuck. Thank you for joining today's Family Office Network's webinar series featuring Freehold Properties. I would like to take a minute to introduce our speakers today. First, Don Brain, Chairman and CEO of Freehold Properties. Don has over 40 years of entrepreneurial business building, M&A, and executive corporate leadership experience. Jeff Walraven, who is Chief Operating Officer and member of the Board of Directors. Jeff has over 28 years of experience, including 22 years of public accounting, audit, and advisory services, and 6 years of REIT corporate executive roles, building startup private companies, taking them to public markets. Lastly, Louis Yee, Chief Financial Officer. Louis has over 20 years experience in investment banking and advisory services, representing private and public companies in all forms of capital raising events, from debt to equity and highly structured securities. At the end of today's presentation, we will have time for Q&A. Please use your questions chat option on your screen to send over any questions that you have. Now, before we get started in our presentation, we do have 2 polling questions that we would like to ask the audience. I am going to open up the first polling question now, if you can answer those accordingly. So the first question has been launched. What level of developed investment knowledge would you rate yourself as to the cannabis industry? Have you already made any investments in cannabis industries related businesses? Yes or no? Perfect. So we have almost 70% saying yes.
Thank you, Lindsay, and thank you, FON members, for taking time out of your schedule to learn a little bit more about Freehold Properties. Freehold Properties is organized as a net lease REIT to serve the cannabis industry in acquiring real estate to fund their growth. We believe that the cannabis industry represents a once-in-a-generation opportunity to participate in the emergence of a dominant consumer product. To date, we've raised a little over $43 million, deployed a little over $40 million, $35 million of which was with Curaleaf, in an acquisition of 6 properties from their balance sheet at cost. 90% of the proceeds was in cash and 10% in equity, common equity in Freehold Properties. Approximately $5 million investment in the development of a cultivation facility in Illinois to be operated by Revolution, a quality operator in that state. We are late in our Reg D fundraising, and we expect to be filing our S11 with the SEC this month on our pathway to becoming a public company. The cornerstone of Freehold Properties is the establishment of capital markets real estate partnerships with the best operators in the industry. Our initial portfolio, largely with Curaleaf, who we believe represents the pinnacle of the operators in the United States, a well-run, public, nearly $4 billion market cap company. We've also been establishing relationships with other quality operators in the U.S. That's led us to the development of a large, actionable pipeline at double-digit cap rates, which should provide investors not only good yields for their investment, but also the opportunity for capital appreciation through cap rate compression as we move from a private company to becoming a publicly traded company. You'll get more information from my colleagues about that in a model soon, comparing us to the one public comparable stock. In addition to the quality portfolio, we've assembled an experienced management team to lead this company to public. My background is, after graduating from the University of Notre Dame, I joined KPMG and am a CPA. I left public accounting to go into the insurance industry, where in an over 20-year career, I had the good fortune to lead 3 top 20 insurance brokers in the U.S. Much of our growth was through M&A activity. I transferred the skill set that I learned on the M&A activity into my passion, the wine industry, and for over 10 years was directly responsible for over $500 million of M&A activity in the wine space, including a number of transactions with REITs. That experience of working with a regulated production industry taught me a lot about regulated industries. I acquired an interest in a single state wine and spirits distribution company. Wine and spirits distribution is regulated mostly at the state level. We've expanded that operation into 4 states. So I've had direct experience with state regulation similar to the regulation that exists in the cannabis industry. I'd like to invite my colleagues, Jeff and Lou, to give a little bit of information about their backgrounds.
All right, thanks, Don. I'm Jeff Walraven, and I'm a co-founder and the chief operating officer here at Freehold Properties. I'll take this minute and share my background that consisted 22 years of client service in the public accounting arena, with my final 8 years as a partner with the international firm of BDO. Now, I'd highlight that throughout the length of my public accounting career, I advised and audited numerous public companies and, more specifically, many public REITs, including both gross and net lease focused REITs for over 15 years. Following that, in mid-2014, I withdrew from the BDO partnership to start and be an executive officer and CFO of a net lease healthcare REIT named MedEquities Realty Trust, based in Nashville, Tennessee. With this MRT platform that we co-built from the ground up, we were able to raise $165 million of private capital via a 144A offering, and then immediately acquired our initial portfolio, put a syndicated credit facility together, and then transacted a preferred equity transaction to continue to acquire assets. We then took the company public on the New York Stock Exchange, raising $265 million in September of 2016. Now, ultimately with MRT, we were approached on some M&A transactions in late 2018 and determined that a sale exit was warranted. And we announced a $700 million public-to-public transaction with Omega Healthcare, which was a $9 billion plus net lease healthcare REIT in January of 2019. Now, that transaction closed in May of 2019, and then I teamed up with Don and others as we formed this entity. Luke?
Thanks, Jeff, and thanks again, everyone, for joining the call. My name is Lewis. I'm the CFO of Freehold. I have 20 years of investment banking experience at Bear Stearns and FBR Capital Markets. I've advised public and private REITs on a wide variety of issues, including initial formation, raising equity and debt capital, navigating the public markets, and M&A. I was also head of equity-linked securities across all sectors, including real estate, consumer products, technology, and healthcare. So in that capacity, I was responsible for the corporate credit underwriting, structuring, and pricing of those securities. So very excited about the opportunity in cannabis, excited to leverage my background to help Don and Jeff build what we believe will be a market-leading public REIT. I'll turn it back over to Don to discuss our board.
Thank you, Lewis. In addition to the management team that you've just been introduced to, we've assembled an independent board to represent investors in the oversight of Freehold operations, operating day-to-day operations. The board consists of 3 directors in addition to Jeff and myself. I want to talk a little bit about each one. Jim Mueller in particular, though. Jim was a co-founder with me at Freehold Properties. Jim and his brother John have been pioneers in the cannabis space, as they were early investors in California reciprocals that were established to serve cancer patients. They moved from those reciprocals into the medical cannabis business in both California and Nevada. About 18 months ago, Jim had sold his business to Curaleaf, and that relationship was instrumental in helping us establish our partnership with that company. Lori Whitman also is our audit committee chair. Lori is an experienced senior executive in the cannabis space with key roles at both Ventas and Care Capital. Randy Churchy, chairman of our compensation committee. Randy is the former Chief Executive Officer and Chairman of Educational Realty Trust. Freehold was built to be, as I said, a public company. This next slide will highlight some of the additional members of our team that are well positioned to administer a public company. It also mentions our key service provider relationships. We've partnered from the beginning with service providers who generally provide their professional services to public companies. I want to highlight one in particular, though, is our relationship with Stifel. This is the first time a middle market bank has served the cannabis real estate space. We think Stifel is the top advisor to the REIT industry in the United States. Back to the industry overview. Cannabis, as I mentioned earlier, is the fastest growing product in the United States. It's growing in excess of 30% annually. This growth is tied to rapid consumer acceptance and adaptation of these products into their everyday lives as a substitute in many cases for over-the-counter or prescription drugs. This growth is also, though, directly tied to real estate. Cultivation facilities, production facilities, and dispensaries are all tightly zoned, highly regulated, generally single-use properties. Without operator access to traditional bank financing, their growth is tied to funding from REITs and or raising additional equity capital in the dilution therein. The next slide shows a map of the United States and the rapid acceptance of cannabis across the country. It's hard to believe that just 6 short years ago, Colorado was the pioneer in establishing medical use cannabis for its citizens. Since that time, 36 states have adopted medical cannabis use for their residents. That encompasses nearly 75% of the population of the United States. 11 of those states have progressed to the next step of providing full adult use. That covers nearly 28% of the U.S. population. There are currently over 300,000 employees working in the cannabis industry nationwide. There are ballot measures this November to expand both the medical use in new states and to move from medical use to full adult use in other states. So this map is sure to change after the November elections as cannabis use continues to sweep across the country. One of the things I want to note here, though, is as states and municipalities both face extreme budget shortfalls, particularly in 2020, cannabis remains a bright spot, both from the taxation of cultivated products and the taxation of dispensed products in their state. States and municipalities are going to be able to put cannabis tax revenue on the books as a substitute for the shortfall of other tax revenue in 2020 and 2021. At the federal level, there are a number of initiatives underway regarding cannabis, from safe banking, which has passed the House of Representatives and is stalled in the Senate, but is likely to become law in the next Congress. Safe banking would provide fully disclosed depository and lending relationships with federally regulated banks and the cannabis industry. Those banking relationships already exist, but are mostly tied to state-run banks and credit unions. In addition to that, there's a number of measures, the most sweeping of which would be full legalization, decriminalization, descheduling of the cannabis drug. And that's likely to pass sometime during the next presidential term as the majority of the states continue to adopt cannabis use. Every business has to evaluate the effects of COVID-19 on their operations, on their industry. Cannabis is no exception. Cannabis, however, though, has been deemed essential in every state where the 36 states, in every state except Massachusetts. So during the height of the quarantine, dispensaries were open, cultivation facilities continued to produce cannabis, and even construction of new facilities continued. Everywhere that didn't rely heavily on tourism for cannabis sales has continued to see strong sales growth as cannabis continues its consumer adoption. I'd like to ask Jeff to pick up here and tell you a little bit more both about the industry and our portfolio specifically.
All right, thanks, Don. One thing I'll just thought about as a reminder, to the extent that you're already thinking of questions and have questions, if you want to type them in and put them in, we can have them somewhat queued up when we get to the end and be able to take those. But so moving on to this next slide and continuing in the presentation let's talk a little bit about our current portfolio and give you a top level view of those assets. Now, this portfolio includes 6 cannabis operating properties consisting of 4 retail dispensaries located in New Jersey, Massachusetts, and Florida, and 2 cultivation processing facilities located in New Jersey and Massachusetts, and 1 leasehold note receivable on a cultivation processing facility that is located in Illinois. So in aggregate, we have a total investment value of $40.4 million in these assets to date. Now, the 6 owned properties in our portfolio, they were acquired through a series of sale-leaseback transactions with the subsidiaries of Curaleaf. We completed all those transactions in August of 2019 for an original total consideration of $28.3 million, paying $25.5 million in cash and $2.8 million in shares of our FHP common stock. We believe it really noteworthy that Curaleaf did take a portion of the sale-leaseback of the proceeds in our common equity, showing their partnership with us at that point. Subsequently, this quarter, we've invested an additional $5.4 million into the Massachusetts Curaleaf cultivation processing facility, and we expect to invest an additional $8 to $8.5 million in that same asset with a commensurate increase in rents. Now, as Curaleaf has expanded the production capacity of that asset from its original 50,000 square feet at the time of acquisition to 100,000 square feet. And this is because the Massachusetts state cultivation licenses allow for a maximum of 100,000 square feet per operator. Now, lastly on this slide, I would note that our next 12-month average yield before we make any additional acquisitions is 10.47% on our currently owned portfolio. So let's move to the next slide on public cannabis operator overview. We'll spend a few minutes getting the lay of the land of these largest public companies and how our initial key tenant Curaleaf fits in and actually leads that universe. First, I'll point out that the 8 largest operators from a range from approximately 80 million in market cap at one end of the continuum to nearly 5 billion of market cap at the top end. Now, in total, based on one of the industry's comprehensive news aggregators, The Stash, there's over 280 Canadian and US cannabis or hemp public company operators, and there are an additional 27 that are currently in the process of going public. Now, second on this slide, I'll point out that our initial and key tenant, Curaleaf, is the largest market cap operator in the United States at the near $5 billion mark. I'll talk more key highlights on Curaleaf here shortly. Now, lastly for here, I'll point out that we have pipeline entrances and discussion capabilities with nearly all of these operators to pursue transactions with them or assets that they currently lease and have to continue to grow, and as we have capital available. Now, in addition, we have access to numerous other high-quality private and public companies not presented here on this slide that we've got active and ongoing conversations with. Now, on the next slide, a little further public cannabis operator detail, shows the operational metrics of these same 8 largest public operators that we've highlighted. I'll bring the focus, though, onto Curaleaf as it is our initial tenant. I'll highlight that Curaleaf, with its recent acquisition of Grassroots and Select, Curaleaf has the largest pro forma revenue of nearly $1 billion amongst all the operators that all the operators. Now, Curaleaf has a strong, well-capitalized balance sheet, It's got 123 million of cash and working capital of 210 million as of their June 30, 2020 public financial disclosures. Curaleaf has also achieved 5 consecutive quarters of positive adjusted EBITDA through the quarter ended June 30, 2020, actually growing from 3.3 million in second quarter of 2019 to 27.9 million in the second quarter of 2020. So one final slide on the Curaleaf, our industry-leading operator. Curaleaf, is a vertically integrated U.S. multi-state cannabis operator. They are positioned in highly populated, limited license states. This map shows that Curaleaf, again with the Select and the Grassroots acquisitions that are now closed, Grassroots closed this quarter, that they are the clear industry-leading national player. They've done this again or evidenced this by the pro forma revenue, as previously mentioned, at nearly $1 billion, and further evidenced by strong presence in 23 states with a diversified portfolio of actually over 90 plus operational retail dispensaries, 30 plus processing facilities, and 20 plus cultivation facilities. Through this, Curaleaf has demonstrated the executive expertise and its research and development capabilities to grow and to provide selection and accessibility across the adult and medical cannabis use markets, as well as in the CBD category through its Curaleaf hemp brand. Now, with this national footprint, it has also been the leader in capital raising across the U.S. cannabis platforms. With its original over $400 million equity offering completed in 2018 in the fall, the recent $300 million debt facility announced in January of 2020, and additional equity capital of 34.6 million Canadian dollars in July of 2020, just a month ago. Curaleaf is also very active in the high growth states, as you can see on this map. I'd highlight here again that we have a 2-year ROFO with Curaleaf on the real estate, which gives us a material built-in pipeline opportunities as capital is available, meaning as they grow, we have the opportunity to grow with them. Now, moving on to the next and one of the most important slides in our deck, experience-driven underwriting and our rigorous investment criteria. We have an underwriting philosophy that is focused on aligning ourselves with high-quality operators with sound creditworthiness, locations, and assets. Our goal is sustainable long-term triple net leases to provide capital to our operating tenant partners. I'll highlight a global fact that our approach involves our full FHP team and board bringing each of our experiences in both core real estate matters, real estate finance, and cannabis industry experiences to the acquisition pursuit table. We also draw in or utilize expert inputs and influences into the mix to get the best decision support possible. We view the importance of operator selection to be as important as asset selection itself. It's kind of like 1A and 1B. In the specialty net lease space like this, it is critical for the operator to have longevity of operations and profitability, which takes both a great asset and great operations. Now, so our operator first approach focuses on a number of factors. First, we start out looking at the management team as we consider their track record of success in the cannabis industry and other industries. We determine that by evaluating whether they tell a story of interest to investors, drive strong brand strategy, or will have defined industry objectives that they are executing on. It's very important to the management teams that they have come together in the cannabis space, that they have the depth and diversification of experiences to apply in this industry. We feel a great example of this is the Curaleaf management team that we've already backed, and that it's led by Chairman Boris Jordan, CEO Joe Lasardi, and COO Neil Davidson, all of which have material successful business building backgrounds and Fortune 500 business experience. Now, second, we look at their financial strength. We analyze the operator's corporate level financial information so that we can gain an understanding of that overall financial strength. This is done by evaluating whether the operator has profitable assets in good markets and whether they have a sight line to profitability. Now, additionally, are they capitalized sufficiently to fund working capital and their capital expenditure needs? Now, unpacking further on this, we are looking to that current state of the operator's balance sheet, especially cash, in supporting the current working capital and operational cash flow needs. It's critical now at this stage of the industry that the operator has achieved profitability and positive operating cash flows, or if they haven't, that the operator has a definable path to be there in the near term based on assumptions that are actually reasonable and supportable as to their achievability. Continuing on this, third, we look at the access to capital through the review of the operator's historical ability to actually raise capital, evaluating whether they've been able to successfully raise it at a reasonable cost. Are there capital structure matters that may have long-term impact to their successful operations and our ability to transact future deals with them? Can they continue to raise capital outside of transactions with us? It is important to us, to the process of the success of the management team's ability to attract and access capital like ours, in addition to other forms, so that to continue to execute their business plans, which lead to operators with desired sustainability, important to the assets on which we transact with them. Fourth, we gain an understanding of their operational culture. We do this by conducting site visits and in-person meetings with key management members to gain an understanding of their operational conditions, their processes, and their asset quality. Asking, is there a strong culture and goal-driven successful attitude that permeates all levels of operation? Are the assets built with considered engineering design, quality of construction intended to be operated for the long term? Or have they been patched together by learn-as-you-go methods? Now, fifth and lastly, looking at the regulatory compliance, we assess the operator's regulatory capability and their history of compliance, asking, are there or have there been any compliance issues throughout their locations of operations? If the answer is yes to this, have they successfully resolved them, and how did they do this? And are they successfully, from a future perspective, are they successfully able to navigate the regulatory application process to gain or acquire new licenses as they grow? Now, with all this background, our acquisition and underwriting process has been developed to achieve the following. We want to identify the highest institutional quality operators with proven track records of navigating the various complex issues that come up in this cannabis space. We want to form long-term capital partnerships, and we want to select real estate that is critical to that operator's success. And if ultimately necessary, those assets could be optimally repositioned or repurposed with an alternative operator as needed. We do believe our underwriting process will support our ability to deliver attractive risk-adjusted returns to our stockholders. So now at this point, again, I'll remind you about question opportunities should you have them. Please go ahead and put them in, but I'm going to pass this off to Lou, who's still going to finish up this very meaty and important slide.
Great, thanks, Jeff. Yeah, we want to spend a little bit more time on this slide because underwriting is obviously critical to our business. So after the operator, we'll look at asset-specific criteria. In that sense, we'll evaluate a variety of general real estate as well as cannabis-specific variables. We focus on financial operating data, including audited corporate financials, historic and projected P&L, and production data. For P&L, individual asset level is optimal, but it's sometimes hard to get. For example, in vertically integrated states, operators have internal costs that need to be allocated, and sometimes they push it from one asset to another for tax purposes. So especially for vertically integrated states, we typically also look at the financial operating performance on a state consolidated basis alongside the top line asset specific data. An asset's location, both state and street, is important from a demand and regulatory perspective. Currently, we tend to prefer limited license states with high barriers to entry and a large addressable population. In terms of location, many people say that in cannabis, each state is like a separate country because of differing regulations. So we need to underwrite our assets in the context of the framework of that specific state. It's probably helpful to walk through a real example to show our actual thought process. So I'm going to walk you through our acquisition of our Belmar, New Jersey asset. In terms of the tenant, we've already talked about Curaleaf. It's leased to Curaleaf, and we've talked about their strength and importance as an operator. In terms of regulatory moat, New Jersey has high barriers to entry, and Curaleaf has a first mover advantage. New Jersey originally granted 6 vertical licenses in the state. Geographically, it was 2 in the north, 2 central, and 2 south. So Curaleaf was one of those original license holders. Demand's been strong, and New Jersey has expanded licenses to meet this demand, but no others are selling product at this time. So only 6 dispensaries are supporting around 60,000 patients. So Curaleaf has a significant first mover advantage in this restrictive state in terms of name recognition, consumer penetration, as well as relationship with regulators. In terms of location, once again, as mentioned, there's only 2 in the Southern Jersey region, one of which is Belmar. This facility is located right off of 295, one of 2 major highways that run through the state north and south. Philadelphia is just 15 miles straight west. This asset is also fully vertically integrated. So all the mission critical pieces are there in one asset: cultivation, production, and dispensary. And finally, financials. In terms of financials, Belmar generates over $3 million of revenue per month. We expect to generate around $1 million of EBITDA per month this year. So operationally, obviously cash flow positive. We have more detailed purchase per square foot information and performance data on our assets available in a data room. I'll reference that later, and I'll let you guys know how to get access to that. Aside from the asset-specific criteria, our lease terms and agreements with operators are also structured to emphasize a long-term relationship and to enhance our investment structure. So all of our leases in generally are triple net leases with 10 to 20-year term, targeting 10 to 13% initial rents and 1 to 3% escalators. We have ROFO agreements where we can, but we always have parent guarantees and cross default provisions. So moving to this next slide, it's a simple illustration of our primary valuation metric and the opportunity for upside. We're going to walk through some math using these high-level numbers, but if you'd like to get more granular company-specific financial data and analysis, we had that data room that I mentioned earlier. It has a full financial model with detailed assumptions, projections, pro formas, and illustrative returns. We just need to have an NDA in place. So if you'd like to have access to that data room, please contact us. But back to this slide. So right now, our focus valuation metric is implied cap rates. Cap rates are basically the rate of return or yield on a real estate investment. That first column shows where we believe we can acquire assets. The second shows where equity research analysts are valuing them in the context of the only public market comp IIPR. And then that third column shows where IIPR is actually trading. So we're assuming we're going to be able to acquire assets at a blended 12.5% cap rate. We can acquire at these high yields because of a variety of factors, one of which is the fact that many traditional debt and equity providers just can't provide capital to cannabis. We don't think that this pricing necessarily reflects the actual value of the asset. Because if you chose the best operators like we do, these assets are fundamentally mispriced and don't reflect the credit quality of that tenant. We also think our platform and long-term portfolio strategy actually de-risks the individual assets and drives value. For example, once again, our 6 current assets, we have a full corporate guarantee from Curaleaf on all those leases. And there are cross default provisions across each of those assets. So that's much different than a single lease on a single building. The public market seems to agree with our view in the context of IIPR. They're acquiring assets at similar cap rates as we are. Research analysts have been valuing them on average at a 7.5% cap rate, and they're trading at that 5.98% implied cap rate. If you're not familiar with cap rates, here's a quick math example. So if we have a building that's generating $10 million of rent or NOI, if that's valued at a 12.5% cap rate, then that would be an $80 million asset. If we applied a 7.5% cap rate to that same revenue stream, the value will increase from $80 million to $133 million. If we use that 5.98% cap rate, then it goes from $80 million to $167 million. So obviously a lot of value creation if we can construct a portfolio that can be acquired at higher cap rates than where we think they should be valued. This math also assumes no debt or other financing structure that would lever those returns even higher. We can't provide a timeline for when we might use leverage, but utilizing debt would obviously enhance those returns dramatically. Moving to the next slide. This slide illustrates our plan moving forward. So we believe a publicly listed US REIT is the best structure for us to be able to take advantage of this market opportunity in cannabis real estate and the best structure to achieve maximum value for our shareholders. Being a publicly listed REIT will allow us to accomplish several things. One, it'll provide us with access to the public capital markets. Two, it'll allow us to take advantage of public market valuation. Three, it'll give us permanent capital to be able to hold these assets long-term. But also four, it'll provide investors with liquidity if they desire a shorter hold period. So we have a defined pathway to achieve this goal, and we've listed it on the left side of this slide. We've already established a relationship with the premier operator in the sector, and we've already built the infrastructure to operate as a public company. We raised $43.6 million in equity last year in the Reg D to acquire our foundational assets. We're currently in the process of raising additional Reg D capital. That offering is still open, but we're hopeful to close that round in the next month or so. With those proceeds, we'll continue to scale our portfolio. After that private capital raise, we'll raise additional capital and generate liquidity for our shareholders through an IPO. We're planning to be in position to launch that as early as December, but no later than the first quarter of 21. I'm going to spend a few moments on listing because liquidity is important to many shareholders. We're structured and organized to be NYSE and NASDAQ compliant. We're going to list on one of those exchanges as soon as the opportunity opens up. But until then, we plan to be listed on the OTCQX and perhaps a foreign exchange, which will still provide investors with immediate liquidity. After the IPO, as we think about long-term portfolio construction, we'll evaluate a variety of factors, including those that you see on the right. We recognize our portfolio is going to evolve as the industry evolves, but in general, what we're looking for is to create a diversified, well-balanced portfolio that's positioned to capitalize on the market opportunity. At the same time, it's going to be appropriately defensive to withstand any potential market or sector headwinds. I'm going to go over one other slide before turning it back over to Don. This last slide is the case study that shows the trading performance of IIPR. So since IPO, IIPR has generated the highest return of any REIT over that time period, 631%. In terms of capital raise, it took them a little while to get started, but they've raised $1.4 billion of capital over their life to date. So this slide highlights not only historic returns in the sector, but also shows how much institutional capital is looking to take advantage of this opportunity right now. Of that 1.4 billion raised, around half of that was just in the last year. Furthermore, despite all this growth in the cannabis industry, it's still early when thinking of the overall opportunity. As we talked through earlier, a majority of states have legalized medical programs, but only a small portion have actually opened up for adult use, although several others are making progress towards that goal. So the cannabis industry is still in high growth mode and will need real estate capital to build out operations and infrastructure. Right now, there's only one public REIT in the market that can fund that growth, but hopefully we can plan on being the next. So I'm going to turn it back over to Don right now for some concluding remarks.
Thank you, Louis. We hope we've given you good information about Freehold Properties as we continue to assemble what we believe to be the highest quality real estate portfolio in the cannabis industry. We have an experienced management team to underwrite these opportunities, an independent board of directors to govern our operations. We will be an SEC reporting public company, hopefully this year, but if not, first quarter of 2021. The cornerstone of our business is to establish the real estate capital markets partnership with the top operators in the cannabis industry. We intend to go long and deep with those partners. We feel like the benefits of the tailwinds of the cannabis industry, the fastest growing industry in the United States, will benefit investors as we assemble a portfolio that provides both good yield and an opportunity through cap rate compression for significant capital appreciation. Lindsay, we'd like to close this segment and move to questions. We are going to have a slide up during the Q&A period that will give you some contact information for us at Freehold. We'd welcome the opportunity to tell you anything we can more about the company and the investment opportunity. Lindsay,
gentlemen, thank you so much. Again, we do want to have time for Q&A, so using your questions chat option on your screen now to submit over any questions that you have, we can answer them accordingly.
All right, thank you, Lindsay. And again, as you have questions, go ahead and put them there in that question box. Don, there is a, and let me actually state this too, on some of the questions as I've read them, they're really more just individually directed, not necessarily broad answerable questions. We will be sure to follow up with, any of those particular questions that are posted on here that way that are really, I'll call it more personal questions of answering directly to you. We will follow up directly with you to make sure that we've answered those.
Right. Thank you.
So, all right. So we've, let's start with this one question that, what are some of the, I guess the key factors of the cannabis market opportunity? What makes it so compelling right now? Why do you believe it to be so compelling?
I think the most compelling element of the cannabis business is its broad consumer acceptance and its fast adaptation by consumers as a product that is principally being used as a substitute for over-the-counter drugs and pharmaceuticals. Cannabis is certainly an old product. It's been used by peoples for hundreds of years, but it is benefiting from rapid consumer adoption and utilization growth. Also, that growth is being driven by, the support really now from states and municipalities that are looking to access additional tax revenue from the growth of this product.
All right. Now, here's a question that had come in from a gentleman that says, so how did the Curaleaf dispensaries perform during the peak lockdown period?
Lou, do you want to take that one?
Yeah, absolutely. Great question. So in terms of rents, all of our assets paid rent during that COVID period. In terms of Curaleaf's actual performance, all of them that were operational were basically stable. In 1 month, there was probably a little bit of a downtick, but in terms of expectations per store and performance versus historics, it was right in line. One of their facilities was an adult use in Massachusetts, our Provincetown facility, which is reopened now and is doing fantastic. But Massachusetts did bifurcate between medical and adult use. So for a short period of time, that Provincetown asset was not open. But once it reopened, it was basically performing to projections. So everything was in line.
Thank you.
So we have another question that was, what is your revenue sharing between management and stockholders? And Don, you want me to take that one or you want to take it?
Yeah, sure. Go ahead, Jeff.
So there is on a revenue sharing basis, a key thing that we need to really make sure that everybody understands is that we are an internally managed company. So we are not a management company on an external basis that's just managing this REIT for the shareholders. So this, as kind of Don had described earlier on the platform, we built this platform to take it public. So we are all full-time direct employees of the company, and some of us board members, and all of us officers within the company. So from that perspective, there's not necessarily I guess a revenue sharing arrangement. Our arrangement is traditional compensation, both cash and incentive compensation and equity. We've got full disclosure of that and what that is within our data room, and can be able to give full details in further discussions that way. So on another question, how are we mitigating concentration risk? Don, you want to handle that one?
Sure. The mitigation, well, first of all, we believe that in an emerging industry like cannabis, partnering with the best operators in the industry is advisable. As Jeff and Lou mentioned in their slides, that we believe Curaleaf to be the strongest operator in the industry. They're a public company that's profitable, that's made their numbers, and And there are an awful lot of operators in the United States that can't say that. We've mitigated that risk through cross-collateralization and full corporate guarantees from Curaleaf. But we do intend to grow the portfolio in addition to Curaleaf with other quality operators as additional funds are available.
Okay. So we have another question that says, are you acquiring the properties when they are fully stabilized and developed? And are we considering funding any development risk on assets?
We have acquired both. We've acquired properties from Curaleaf's balance sheet that were stabilized and developed. As though one of our properties with Curaleaf, we were involved in a build out of the New Jersey operation. We are building a facility in Illinois, a cultivation facility. Illinois represents really probably one of the best markets in the United States for cannabis. So we are involved in both development of facilities as well as acquisition of facilities, all at cost.
All right, there's another question here. Do you have percentage rent agreements with tenants? I'll answer that one. We do not have percentage rent agreements at this point. You know, I'll say there are REITs that have percentage rents, but the percentage rents are have to be very specifically designed to maintain REIT qualification. They have to be top line numbers. They cannot be made on net numbers. But here in the cannabis space, just because of the regulatory matters within cannabis space, you know, really none of the REITs, the private REITs that are actually taking REIT and the public REITs are taking any kind of percentage rent participation in operator revenues at this point. On another question, can you discuss the cap rate differentials between cultivation, processing, and dispensary operations?
Lou, do you want to take that one?
Yeah, sure. So, cap rates range anywhere from, call it 10 to 12% on dispensaries. And these are broad numbers because obviously it depends on where the exact location is. But let's call it, 10 to 12% on dispensaries, and then cultivation anywhere from 10 to 15%. And so in general, cultivation is a little bit more higher cap rate product. I think some of this is due to location, frankly. Retail dispensaries are typically in retail locations, where our cultivation facilities are either in industrial or flex office type spaces. And so just in terms of replacement costs and general cap rates, they're typically reflective of that differential.
All right, another question here is, what is the threat of states issuing additional licenses for distribution?
States, I believe, will continue to issue additional licenses for both cultivation and dispensaries. States are interested in making sure this industry is protected in a way that generates the maximum amount of tax revenue. They don't want to overbuild. That part of that overbuilding is the limited zoning that's available, so you can't build on top of each other. But I do expect that states will continue to issue licenses as the industry matures and continues to grow with consumers.
Okay. Now there's another one here that is, when the Banking Act is passed, how will that affect cap rates as more traditional debt capital becomes available?
Well, I think we actually welcome safe banking passage. It will provide first and foremost, disclosed banking relationships with federally regulated banks for depository relationships, but it will also provide debt. But our conversations with those banks indicate that banks are going to be cautious about lending into this space. And our suspicion is advance rates of 50% or so will be high advance rates in this space. and not nearly enough to really disrupt the opportunity for us to continue to scale our portfolio. No operator really wants to invest 50% of their equity capital raised into real estate into real estate development.
Let's see here. I was trying to make sure I hadn't been taking questions off the list while I was asking them, and so now that a few more, trying to actually now just removing them so that I can actually see which ones. Let's see here. Just 1 minute.
As you're looking up, I just want to mention one more time, we've got the contact information for myself, Jeff, and Liz up on the screen. We'd be happy to get you additional information about Freehold Properties, access to our data room, as Lewis mentioned. What is required is an NDA. We are closing our Reg D capital raise here imminently as we file our S11 with the SEC and move towards an IPO, hopefully later this year. Go ahead, Jeff.
Yep. Now, this question was, is if you do not go public, what is the investor distribution plan? I will say on that one, you know, even as a private company, we have made a REIT election. So we have within tax motivations and qualifications to make distributions to the extent that we've got taxable income to maintain our particular REIT status. So as we raise additional capital and put assets out, we will be making, you know, ultimately would be making dividends even in a non-public format. Our general dividend policy is intended to be in that 70 to 80% of AFFO range. So as we scale up, whether public or not, dividends would begin. And, you know, to the extent that we, you know, I'll say we have the know-how, we know the ability to get public. Only reason we won't get ourselves public is if it's just not the right thing to do in that particular market. But there are with numerous still alternative opportunities to continue to grow this company and other results as we grow. So.
Yeah, the reason to go public at this stage of our development, which is certainly smaller than most REITs, is in fact this access to public capital. There's just a limited amount of private capital interested in investing in the cannabis space, but we've talked to larger institutions and there is a significant interest in investing in a public REIT. I just, you know, before we close, I just want to make sure, Lindsay, thank you for organizing this webinar. We appreciate all the folks at FON for letting us present. We appreciate all of the members for taking time out of their schedules to listen and learn about Freehold Properties and a little bit, hopefully, about the cannabis industry. We invite you through this contact slide to reach out to any one of us. We'd be happy to get you additional information about Freehold, about the cannabis industry, and about the opportunity that we see to invest in cannabis real estate going forward.
And I'll reiterate again, we will follow up with all questions that were submitted that didn't get entered in a public format. So.
Gentlemen, thank you so much. And yes, as Dawn mentioned, we will be following up with all of you individually, but if there is any other questions, please feel free to reach out to us directly. We thank you all for joining us today, and we look forward to connecting with you soon. Dawn, Lewis, and Jeff, thank you very much. We hope you have a great day.
Thank you.
Thank you all.